Time for some business news next with Yuka Royo. Good evening, Yuka. The French Prime Minister has just announced that the government won't be easing the lockdown in place. That's not what some 300,000 retailers in the country wanted to hear, is it?
Well, they wanted to hear that, at least for them, for retailers, the restrictions would be eased. But with 1 in 4 deaths in France currently linked to COVID-19, French Prime Minister Jean Castex said that it would be irresponsible to ease restrictions now. He did stress, however, that the government would do everything it could to help small businesses. Now, earlier, the government estimated that the economic impact of a second lockdown would be about half of that during the spring confinement, because construction and other economic activities would continue. The French Employers Association, the business lobby MEDEF, however, thinks that the impact would be much bigger. It estimates that between 50 billion and 75 billion euros will be lost during the month of November alone, because the closure of shops would have trickle-down effects on other sectors of the economy. Now, the pre-Christmas period is really crucial for many of France's 330,000 retailers. Most of their annual sales are made between November and mid-December. That is why some of the shops have continued to do business, defying the government's ban. The state has promised an aid of up to 10,000 euros each for small businesses with fewer than 50 employees. It is also encouraging landlords to waive rents to small businesses for November in exchange for a tax break next year. The Prime Minister says that some shops may be allowed to reopen on the 1st of December, provided that the virus situation improves.
And Yuka, staying in France next, where the government has announced that a tyre factory in the north of the country will be shutting.
Well, that's the Japanese tyre maker Bridgestone, and it's closing the door on its factory in Béthune in northern France. The French government had mandated a consultancy firm to discuss with Bridgestone possible ways to maintain some production activity at the plant. But the Japanese tyre maker says that that option was not viable. After studying it, neither for the company nor for its 863 employees at the plant. It says that it would not solve the problem of overproduction, given that the situation continues to worsen because of the pandemic. The decision comes as Bridgestone in Tokyo said it expects to see its first net annual loss in 69 years because of slumping global demand. The Japanese group estimates its net loss at 480 million euros for this year, against last year's net profit of 1.9 billion euros. Let's take a listen to France's junior economy minister at the plant.
Bridgestone has closed the door. Bridgestone is leaving the Béthune site, but we will be here alongside the employees to find the best possible solutions. To ensure that the day the site is due to close, the next day, the prospects of each of the employees are known to them, and that they can see the lights at the end of the tunnel.
And how did the markets do today, Yuka?
Well, pessimism over the pandemic, the worsening virus situations in Europe and the United States is once again weighing on global stocks. Here in Europe, major indices all ended the day in negative territory. The decline accelerated in the afternoon here in Paris and also in Germany, in Frankfurt. London's FTSE also slid after latest data shows the British economy grew, but at a slower pace than expected in September. On Wall Street, extending losses too. The Dow and the S&P off currently by about 1%. The Nasdaq faring slightly better following a sharp sell-off earlier in the week. The downward trend, though, comes despite the latest unemployment data showing that the number of first-time job seekers last week dropped to a 7-month low.
Yuka Royo, thank you very much for that. Yuka there with the business news.